Commercial real estate investing for beginners. Getting into commercial real estate can feel like navigating a maze in the dark, but it doesn't have to be intimidating if you light your path with a bit of foundational knowledge. Start with research. Before you dive in, you need to hit the books and the streets. That means researching what type of commercial property you're interested in: retail, office spaces, warehouses, etc. Portland, for instance, has seen a boom in microbreweries, and warehouses are being snapped up left and right for this purpose. Think local, think small. Don't feel pressured to land the next high-rise downtown off the bat. In fact, starting small often positions you better. A small multifamily unit or a mixed-use property can be a great start. Gain experience managing a property, understanding tenant needs, and the inevitable quirky surprises no book can sufficiently warn you about. Due diligence is your best friend. Due diligence feels about as exciting as watching paint dry, but it's as crucial as a keystone in an arch. You need to understand every aspect of the property: the condition of the building, environmental assessments, zoning laws, and the current market conditions. My local Portland market is very different from what you'd find in, say, Miami or Chicago. Practicalities vary widely depending on location. Connect with the Pros Network. Find a seasoned commercial real estate broker. They're worth their weight in gold. Unlike residential real estate, commercial deals rely heavily on connections. That broker can be your Gandalf through Middle-earth, guiding you past the Balrogs and pitfalls you didn't even know existed. Financial analysis is your compass. Basics first. Understand cash flow, net operating income, NOI, cap rates, and internal rate of return, IRR. These are your compass in the wilderness of commercial real estate investing. Each property you consider should undergo a thorough financial analysis. Don't skip the fine print. Lease agreements are not page-turners, but the details nestled in those paragraphs can define your experience with a property. For example, who is responsible for maintenance? What happens if the property isn't up to code? Understanding the lease structure, NNN, gross modified gross, for each prospective investment is paramount. Plan for vacancies. Vacancies are the Achilles heel of commercial real estate. If you buy a property with the idea that it'll be 100% leased out all the time, you're setting yourself up for failure. You need to have a financial cushion to handle the lean times: permits, licensing, and local laws. This is as fun as a trip to the DMV. However, jumping through bureaucratic hoops is part of the game. Each city, like my hometown Portland, has its own flavor of red tape. Get to know yours intimately. Consider an LLC protecting personal assets by forming a limited liability company. LLC can be a smart move. Should anything go south, you want to make sure you're covered. It's like wearing a bike helmet. You do it hoping never to test it. Tenant relationships. Your tenants can be your greatest asset or your most significant headache. Foster those relationships. Happy tenants tend to take care of your property and stay longer, which means a more reliable income stream. Remember, commercial real estate isn't a sprint. It's more of a marathon. Patience, research, and a network of knowledgeable people will be your most valuable assets. Good luck out there, Portland, Oregon, or wherever you're setting down your commercial roots.